The epic with Russia's frozen foreign exchange reserves is taking on new colors. Not only do such antics of Western countries contradict the rules imposed by them on the whole world, but it has also turned out that any storage of monetary assets in the West is a fiction. And it was Russia that proved it to the whole world. Back in 2022, a NATO alliance think tank reported that the total amount of Russia's frozen assets is between $80 billion and $100 billion, meaning that there is no talk of $300 billion. The Atlantic Council, that is, the Atlantic Council, a U.S. think tank founded in 1961 under NATO, writes, "Where's the money?" The identified assets amount to less than a third of the $300 billion. Charles Lichwell, deputy head of NATO's Economic Policy Center, admitted that he has no idea where the rest of Russia's allegedly frozen reserves are. In March 2023, the Repo Task Force, a specially created international body to search for and seize Russian assets, not only of the government but also of businessmen, reported that it had managed to freeze or restrict the movement of capital totaling $58 billion over the course of its activities. Here are the results of the Repo Task Force's activities. Where's the other $256 billion? Lost. 2. The EU claims that Western countries have cumulatively frozen about $314 billion. But no evidence from the EU bodies was provided. The world's media have also puzzled over this issue. For example, Politico, after examining this issue from all possible angles, writes that according to the documents presented, the EU has frozen Russian assets totaling 68 billion euros, and most of them are in Belgium, which accounts for 50 billion euros. At the same time, according to the politician, the EU has no idea what exactly they have frozen, i.e. what part of Russia's national reserves is actually frozen in the EU. In all internal documents consulted by the publication, the number of 33.8 billion euros appears in the policy. That's a twist. Where's the rest of it? Luxembourg's finance ministry, which accounted for something like 5.5 billion euros of Russia's frozen reserves, suddenly, against the EU's demand, signed a document authorizing the unblocking of Russian assets that had previously been frozen due to Western sanctions. The point here is that competent authorities may authorize the release of certain frozen funds and economic resources. This permit was valid until January 7, 2023. Given all of the above, the Western elites' globally publicized freezing of $300 billion in reserves for Russia's disobedience looks questionable, to put it mildly. All that Western countries have been able to really freeze is exclusively the capitals and assets of our businessmen, which they have been withdrawing to Western countries for 30 years. Yeah, they're not even hiding it. The same Friedman complained that he was squeezed out of England, and Peter Avin publicly admitted that investing billions of dollars, and in reality withdrawing capital, in Western countries was a mistake. Had the smarts to make billions, but didn't have the smarts to keep them. As Vladimir Putin has said more than once, speaking before the People's Assembly, no Russian regrets the arrested yachts, palaces and monetary assets of our oligarchs. And he's absolutely right about that. But what has caused the strongest resonance and criticism is the freezing of Russia's national assets, including the assets of the Central Bank of Russia and the assets of the National Welfare Fund. FNB, Rainy Day Fund. And those assets were frozen to the tune of over $300 billion, and our central bank had to publicly account for it. Moreover, the central bank declared where, how much and in what form Russian international reserves are kept. For example, the largest share of our reserves was in euros. Data on the structure of Russia's international reserves as of January 1, 2012, just a month before they were frozen. For example, $180 billion of Russian assets were concentrated in the Belgian fund Euroclear, which is the world's largest securities depository headquartered in Brussels. Kind of like they are still officially there, but there are some miracles happening with those funds. They are not there, or they are there, but in a much smaller amount than declared. But why is it like this? Why do they wiggle like ears in a frying pan? I think it's confusing. With Russia's frozen assets, the last EU official has already lost sleep. It's actually very, very simple, but interesting. As they say, watch your hands. In early March 2023, Anton Silwanov officially announced that Russia had lost access to part of its gold and foreign exchange reserves. This includes the National Welfare Fund and cannot use it. Moreover, the NWF itself has come under blocking U.S. sanctions. The NWF, through the Russian Central Bank, deposited its reserves in euros, pounds and yen in Western accounts. Here are the official data of the Ministry of Finance of Russia on the results of placement of the National Welfare Fund for the period from January 1 to October 31, 2002. By the end of 2022, the Ministry of Finance said that the FNB will be restructured and all funds held in pounds and yen will be zeroed out. The new fund structure will consist of 60% Chinese yuan and 40% non-cash gold. It would seem that the sanctions are working. Russia has officially written off at a loss, i.e., zeroed out a not insignificant share of its foreign assets. But it was how exactly it was done that made even the most impenetrable politicians in the West squirm. First-hand information. Excerpt from the document on the results of the placement of the National Welfare Fund. The Central Bank of Russia, or Belino, as you like, has converted the frozen currency into a ruble deposit at the current exchange rate. That is, despite the fact that foreign currency accounts are frozen, it did not prevent this frozen currency from being converted into rubles. The media wrote about it too. Here is a Russian newspaper, where it is written that rubles were sold under the currency. Yes, international rules prohibit printing local currency without backing it with dollars, euros, pounds and yen. That is why the necessary ruble emission requires a solid stock of foreign exchange reserves on deposits in Western countries. Roughly speaking, it used to be that how many dollars came into the Russian economy, so many rubles could be printed. The inflow of currency was used to produce 90% of the emission of rubles into the Russian economy. But then how did Silvanov and Nabiullina go against Western rules? Of course, it's not that simple. Such a feint was an initiative of the Russian government. The very possibility of selling rubles through frozen assets was signed by Mishustin in October. Before that, the same Silvanov had been developing plans to exchange frozen assets. But it didn't end there. Undeterred, Putin kept Nabiullina for another term. The Central Bank of Russia has started printing rubles to secure the reserves frozen by the West. In June 2012 alone, 630 billion rubles were converted, and in July another 1,200 billion rubles were converted. The money supply in Russia, contrary to the rules of the West, grew like on yeast. Aggregate M2. Rubles in circulation plus bank deposits, plus building society deposits, plus national savings accounts, etc. Here is aggregate M1 in the broad sense, demand deposits, including bank debit cards. Here is aggregate M0, cash in circulation, coins, banknotes. But if you just print rubles without any collateral, inflation will grow, and with such a scale of printing rubles, perhaps even hyperinflation. However, the moment the frozen assets were converted into rubles, the inflation rate was on the contrary falling, as the frozen euros and dollars became this very collateral. Here is the inflation rate in Russia. Inflation started to rise when there was a local saturation of the economy with a money supply of bridge 4,630 billion, of which bridge 2,800 billion was converted in 2023. In the new draft budget, Russia did not even trifle and immediately laid down the conversion of 45 billion frozen reserves into 4,100 billion rubles. At the same time, Russia's trade balance stabilized at pre-sanctions levels. Here is Russia's trade balance by year. That is, the frozen currencies, rubles, printed under bail-in are converted in the world economy. But that's not all. At the end of July 2022, a bill on Russia's withdrawal from the IMF was introduced in the State Duma. This was an absolutely well-considered and correct decision against the background of the fact that Russia violated the main rules of the world economic system by starting an independent issue of money without currency collateral, because the currency is frozen and it is impossible to make any transactions with it. We would have been expelled from there anyway for such manipulation. It was only a matter of time. So why wait for the inevitable when we can put an end to all this mayhem ourselves? Meanwhile, the IMF suddenly just turned a blind eye and legalized internationally the rubles printed against the frozen assets. Moreover, it even accepted these rubles into its aggregate international asset. Each IMF member state is required to contribute to the fund in certain currency proportions, 3/4 in its national currency and the remaining quarter either in foreign currencies, the US dollar, euro, Japanese yen, or pound sterling, or in the form of an IMF-designated domestic payment instrument, the SDDS, whose rate is floating and set by the IMF according to the value of the bi-currency basket. That is, the SRD can be deposited in rubles at its current exchange rate. The Central Bank of Russia publishes the exchange rate with the SRD on a daily basis. For example, on the 23rd of November 15, this rate was just over 120 rubles per SRD. In short, not only did we print rubles by converting frozen currency, but we also deposited those rubles with the IMF, which accepted it as a legitimate financial contribution. Consequently, the IMF will lend this financial asset to countries in need. But the bill on Russia's withdrawal from the IMF was suspended. It's too early for us to get out of there with such interesting odds. From such a performance, MEPs went into a deep knockout. Pounds and yen were converted into rubles and debited, i.e. zeroed out by Russia's central bank, but not dollars and euros. Therefore, the US states in its reports that it is as if it has lost Russia's previously frozen assets, without even specifying the specific amount of frozen funds of the Central Bank of Russia. And so the EU countries found themselves not only hostage to this situation, but also in a complete deadlock, except for Luxembourg, which was in time. They can't unfreeze the reserves, but they can't keep them either, as Russia prints rubles for them and lets them not only into its economy, but also into the international market, trading in rubles, for example, with China. In order for Europe to get out of this impasse, we need to dump these reserves on someone, and fast. Otherwise, Russia will be able to reuse them when unfreezing. And that would amount to the EU paying Russia that 300 billion out of its budget. On the other hand, if they transfer our reserves somewhere, it will destabilize the entire euro financial system, as the European Central Bank itself admits. Many central banks in other nations will simply abandon euro assets. This would jeopardize the financial stability of the EU. And given that the euro now accounts for more than 20% of the world's reserves, about $12 trillion, it would mean the collapse of the EU's monetary financial system. The EU has little choice: either lose $12 trillion or pay Russia $300 billion by unfreezing it. This will allow you to convert them into rubles once again, or use them for another purpose. The US keeps inciting the EU to start handing over frozen Russian reserves, but so far, European officials have shied away. The US will withstand such a blow, but the EU will not, because the US has almost no frozen Russian reserves, unlike Europe. And then, very timely, Vladimir Putin signed a decree on the exchange of frozen assets of Russian investors with foreigners. The ordinance is signed on November 8, 2023. It states that deals with foreigners will be concluded through a bidding process. The terms and conditions of such trades and transactions will have to be established by the Government Commission for Control over Foreign Investment in Russia. That is, the central bank will allow the exchange of frozen assets for ruble funds of Western companies. Such an exchange would return money to millions of Russians who owned foreign stocks or other securities but were held hostage to undue Western sanctions. The exchange will come from ruble accounts like SI, where trillions of frozen rubles are piled up by runaway Western companies. If such an exchange takes place, even under a forced scheme, it will mean that the mass of rubles printed for the frozen assets of Western countries will become legitimate even in their domestic market. They will, after all, exchange shares and securities, albeit frozen, of their companies and run it all through their financial system. Other countries have started to follow Russia's example. For example, China and Saudi Arabia are not only actively reducing their investments in Western government bonds, but have also declared that they will take mirror measures if the West considers treating them in the same way as Russia. So they froze Russian money on their heads.